Well, this has certainly been a really tough year for Beyond Meat, and Q1 is proven to be no different. Is there anyone out there who feels that there's a lot of bears coming at you, like running after you to tell you, I told you so. This is a company that you can't believe in. They've had their glory days and they'll never take off again. Well, nothing could be further from the truth, in my opinion. Their journey has barely begun. Likewise, like most journeys, there are bound to be hardships. And I would say right now, that is one of those times. Tonight we'll talk about Beyond Meat's earnings for Q1 and what to expect near term. And also take a look at what to expect from Q2, which does actually look a lot more promising. And before we start, I just want you to know that I actually risked life and limb trying to listen to the conference call, making notes while walking in the forest at 5:30 a.m., trying to steer away from annoying branches, rocks, and streams that were in my path. So I truly hope I've earned an early smashing of the like button to help spread the channel. As always, I truly appreciate your help. If you're new to this channel, my name is Jesse, and this is the PlantStock channel. If you haven't subscribed yet, make sure to subscribe if you want to get more information regarding Beyond Meat, Tattoo Chef, or the Very Good Food Company, to name a few. Don't forget that bell button. I recently did a poll on the channel asking you guys what you think regarding Beyond Meat and their earnings, and this is the way it looked. So that means that probably some of you out there are quite disappointed. Probably a lot more people than actually subscribes to this channel. So what is actually going on now? So it's actually down around 7%, ticker symbol BYND. And just in the opening, it was down around 10%. And actually, I wouldn't be surprised if we're going to see lower today. We'll see. It's a volatile stock, so you never know here. And to be honest, I wouldn't be surprised at all if we see this stock eventually going under $100. And why is that? Well, it has to do with earnings. So let's take a look at the earnings. As you know, Wall Street analysts actually expected it to be around $114 million in revenue for Q1 2021. This is the actual results, which is the net revenue were $108.2 million, which is still an increase of about 11.4% year over year. Gross profit, $32.7 million, and gross margin, 30.2% of the net revenues. And the actual net loss was $27.3 million, and adjusted net loss was $26.2 million. Adjusted EBITDA was a loss at $10.8 million, minus 10% of net revenue. So if we go into more specifics, we can see here, like we said, the net revenue about $108.2 million. And for 2021, retail was then around $64 million in the US alone. And yeah, the year before that, there was 49. So we can see it's about 30% up or 28% up, which is really positive. But here's the ticker. When we go to food service, 16.7 million a year over year, 22 million. So it's a 26% decline. So that looks probably pretty bad in a lot of investors' eyes. And that's one of the reasons we see this selling off, right? And if we go look at an international level at the retail, well, this is actually the amazing numbers here. $17.2 million. The year before that, about 6 million. So that's almost 200% increase. So try to remember that number when you're worried about the food service out there. So that is actually huge, right? And the food service internationally, yeah, even worse than the US. About 10.3, 10.4. It was actually 18.5 last year. So that's a 44% decline. And now, why is it that it's more on an international level? Well, to be honest, I know here in Europe anyways, a lot of countries here probably took it a lot more serious than the US did, the pandemic. So I think a lot more shut down and for longer periods of time. So I think that is one of the explanations. But I think, again, it's really important to understand that, yes, this is really bad numbers, right? But we know there's been a pandemic and the pandemic is ongoing, and especially Q1. So I don't think it's anything that's surprising. But what is surprising is that actually it's almost a 200% increase here, and it's still a 28% increase in the retail stores, which means that, guys, in a year from now or 2 years from now, we're not going to have this kind of issues when people have taken their vaccines, right? So that means that the stores are still going to grow and do well, and the food service is going to catch up. So yeah, I wouldn't worry. But let's go on and continue. And if we take a look at gross profit, it's around $32.7 million, gross margin 30.2% of net revenues. And that is less, of course, compared to 2020, which was 37.7 or 38.8%. And according to the CFO, this is due to higher transportation and warehouse costs, lower net price realization due to increased trade discounts and changes in product sales mix, higher depreciation, amortization expense primarily attributable to incremental fixed assets associated with the company's production facilities in Pennsylvania, the Netherlands, and China, and increased fixed overhead costs, which is not weird, right? If you're putting out 2 to 3 new facilities within a couple of months, you're building them up, you're preparing them, obviously it's going to be a lot more cost. Now, an interesting part here, which I was not aware of, is their enormous cash balance at the moment. They actually have 1.1 billion in cash balance since April 3rd of this year. And the reason is that they actually completed a convertible senior notes offering in the aggregate principal amount of 1.15 billion. So they've basically taken on debt. But there's a reason for that. We're going to talk more about that as we move on. And I thought we could just look at another page here. Again, we talked about the gross profits here, about 32 million, right? And as we know, is going, there's losses, income from operations, 24.6 million. And then, the net loss in income, 27 million. So a lot of losses here, no questions about that. But we have to realize, when it comes to the gross profits here, about 16 million, right? About 16 million is being used in research for just 3 months. That's amazing numbers, right? We talked about that they put a lot of their money, their profits, or what they have extra on R&D to be able to, build the best version of a hamburger out there, which they are doing at this moment. There's no real competition in my eyes, but only in 3 months. And normally they would put about 8 to 10% in research. If I look at this number and compare it to the overall they got for these 3 months, that would be around 15%. So they've actually risen it up at the moment. So not so strange. Imagine that they didn't use that money. We would have a whole different gross profit there. So just something to keep in mind, right? They're doing this for the future. They don't care that much about what's going on now. It's all about the future. So I thought I would talk a little about what they actually talked about on the conference call. And folks, if you really want to get into the head of a CEO and where a company is headed, I do suggest that always listen to the conference calls. You get a lot of information, and sometimes you have to listen to it twice. Like me this morning when I listened to it, 5:30 in the forest, I listened to it in the car later again, and then actually a little more, some parts later before I actually started making this video. But what were they talking about mainly here? Well, obviously there's been a lot of expenditure these couple of months, and it's been more than most years. And they think they probably won't be putting that much in expenditure in the coming years right now. But the reasons is that they're have this ongoing expanding and a lot of facilities, and then one facility in the Netherlands, Pennsylvania, and China. And they're putting a lot of effort into R&D and their new HQ. But there came up some news that might be scary for some of you, and it is that they actually, during these 3 months, they've lost 10,000 locations. And I know that sounds pretty bad, and I guess it is kind of bad to some extent. And one of the reasons for that is that they moved away from a distributor, a partner in Germany, because I figured they didn't see eye to eye, because this distributor, he or she was more interested in having discounted prices of their product, and this doesn't seem to fly that well with the CEO, which means that he felt that this company, this distribution company, cared more about being heavily relied on discounts. And Ethan Brown wants to grow organically, right? He doesn't think that that's sustainable in the long run. But the good news at the same time is that during this period, he has actually reached another 2,400 locations. So I guess they're only down about 7,500 or 600. So, but he said he's expecting to gain back that and more in the near term. So maybe don't be too nervous about it, but it does actually look bad to some extent. And I understand that. And this could be one of the reasons too why people are selling off. So what about the new raised capital of $1.1 billion? That's amazing money, right? That's a lot of money that needs to be handled in one way or other, right? And the reason, according to the CEO, is because they want to be ready to expand quickly. Because right now, during this time, as we know, the plant-based movement is growing rapidly. And Ethan Brown wants to be part of that. And even though they're the industry leader now, they want to keep being the industry leader, but they want to keep gaining more and more market share on a global scale. So that means that they need to be up to date. They're going to keep putting money into R&D, right? To be able to improve their products even more, making it more attractive, making it taste like meat even more. So also, another reason is actually there are 3 partnerships with McDonald's, as we know, PepsiCo and Yum Brands. Because these are huge deals, so he actually doesn't know what to expect in the future, right? They might be expanding even more, which means that they need to be prepared to make improvements in their facilities, build more facilities, and be ready for that. And I think that's a smart move in itself. But also, they're actually building one more facility in China, and meaning that's going to cost a lot more, and always be prepared to improve again the different facilities. But also they want to put an innovation center not only in the US, as they've started now with their HQ in California, but one in China and one in the Netherlands as well, and future innovation centers to again be able to improve their product more and more. But eventually, one of their biggest reasons is obviously, as we've talked about, to be able to come up with the perfect product, but that they're able to lower the cost in some way. And that takes research on how to do that, of course, so that within 2 to 3 years, they're coming out with a product, at least one product that is cheaper than meat. And as we said, that will be a game changer. Now, a good question came out from one of the banks, one of the larger banks, one of the institutions, and they asked, what about Impossible Foods? As we know, a lot of people consider them the biggest threat, especially since they're going to IPO soon. And his answer was pretty good, the CEO. He meant that, yes, as we know, Impossible Foods has been slashing their prices the last couple of months, which means that Impossible Food is actually selling more products. And that could be considered a threat. But even though they're selling more products, they're not even close to the kind of revenue and sales as Beyond Meat. But still, they're selling more. And should we be worried? Well, according to Ethan Brown, not really, considering that now when they slash their prices, that means that they have reduced their prices, and the revenue they get now is from discounted prices, which means that they get about 2/3 of their revenue from discounted prices, which logically means that they're going to have a lot less margins, probably not have a lot of money left. And Beyond Meat, they usually get their revenue from about 1/3 of discounted, which is the standard in the market. And he doesn't want to change that. And whilst we're talking about that, he also stated, like he did in the Q4, is that still, without a doubt, Beyond Meat in the US alone right now, and other countries as well, but especially in the US, is without any competition the most popular plant-based product. There's no competing there, really. And people are very loyal to the brand, to the Beyond brand, meaning that even when there comes out other products that could be seen as a competition, a lot of these loyal fans, the loyal consumers, will come back and buying the product because they're happy with it. And they also talked a little about the new 3.0 burger, the Beyond Burger, being a healthier version but tasting more like meat, that's probably going to be a huge seller now in the coming months and coming years. But also something I did not know is that they're coming out with another version later this year that is supposed to be even healthier than the 3.0. I'm not sure if it would taste as much as meat as the 3.0, but people have a choice if they want an even healthier version, which I think is a really smart move, as we talked about. I think if they want to keep having an advantage, they need to have a healthier product. And something I'm sure a lot of you wanted to know is, what about Q2? What kind of predictions do you have about that? And that's something that tells something about the company, right? If you can feel more secure. And they seem quite bullish about that. Wall Street has been predicting about $142,000, which is, I think, a huge leap from where they're at now, right? And they predict themselves about $135 to $150 million, which is obviously a huge leeway, but still a pretty close number there. So, and they also do expect less operations from this year on. So to conclude this, well, it's fairly obvious that they didn't meet Wall Street's expectations. And as I stated earlier in the video, the pandemic hasn't stopped during January, February, and March, right? So I don't know why people would think that they would have been doing much greater now, because restaurants hasn't started opening up everywhere, far from it. So I do think we'll see something very different in the next Q2. I really do, because they are going to start opening up now as it gets warmer, and people are going to take the vaccines and start going out to eat. So I do see us having a different number. This is speculations, of course, but what I've seen so far and what I've understood of the business. And personally, I encourage that they put a lot of money into R&D, because again, you want to have the best kind of product out there. You want to have that advantage. So in the long run, it might cost money now, and you might lose money now, but in the long run, all great companies usually do that. That's why I've said several occasions, this is the Tesla saga all over again, but in my way, it's going to be a bigger saga. No one else in this sector is committing themselves in this way, always with a long-term perspective, even if it sacrifices profits and a huge drop in share. This is not what is important to the CEO, who has an incredible long-term vision with their product and company. Now, should you be worried about the stock price crashing down? Not at all, in my opinion. Again, I'm not a financial advisor, but not at all. Guys, I just bought a lot more stocks in this company. As you know, I just sold my car and bought stocks in this company and in the Tattoo Chef. If you haven't seen that video, take a look at it up here. And obviously, I'm also at a loss here, like I think many of us investors are. And I'm not worried at all. These are perfect prices. Yes, I wish I could have waited a couple of days, a couple of weeks, but I knew you don't know. You can't predict the market, right? So I'm not worried. I know that if it keeps being down now for a couple of months, perfect. I'll just invest more at great prices, and so should you, in my opinion. Well, folks, that was it for today. I truly hope you got some value in today's video. And if you did, don't forget to smash that like button. And if you want to keep getting more information regarding Beyond Meat and other plant-based companies, make sure to subscribe and don't forget that bell button. And as always, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Folks, hope you have a wonderful Friday. Hope to see you soon, and peace out.